everyone, and welcome to Your Money Story. I'm your host, Renita Young, and today we're going to talk all about taxes. Now, for a little bit of background, right now Congress is still grappling with an infrastructure spending bill, and the Biden administration has proposed about $4 trillion worth of federal spending that'll happen over the next 10 years, partially funded by who? You, individuals and businesses. So it's good to find out how these rules impact you should they become part of the law in the near future. And I'm going to bring on Michele Valbrun. He is a CPA based out of Atlanta. Some people call him Money Making Mitch. And we're going to go grab him in a moment. Hold on for a second. Hello, good morning.
Good morning. How are you?
I'm well. How are you, Michele?
I'm amazing.
Great. Thank you so much for joining me. The people really love you already. Already you have comments coming on. And so on Your Money Story, we start with just that. So what I know about you is that your parents came here from Haiti and they started a tax practice in Miami. And so you grew up knowing about ownership, knowing about taxes, but what was your relationship with money like growing up?
Yeah, that's a great question. Again, thank you for having me on. Extremely honored and happy to be here. So really, my money story is this. So as you mentioned, yes, my parents came from Haiti to the United States really to give my sisters and I an opportunity to be able to live the American dream. So, one of the things that I noticed is, as you mentioned, they did own a tax practice down in South Florida. So with that, I was exposed to entrepreneurship. I noticed that they had some freedom as it relates to entrepreneurship, etc. But a couple of interesting things happened through that experience. So one of the things that I experienced growing up is that my mom had to raise my sisters and I on her own. So unfortunately, my father, he ended up getting arrested. And because of that, it kind of separated our family. And unfortunately, I hate to admit it, but my father actually got arrested because he was not reporting all of his income for tax purposes, right? So when I noticed that at a young age, and I noticed how it broke up our family, this happened when I was about 13 years old, had to visit my father in jail, he was on house arrest, etc., got kicked out of the country. So really for me, one of the cornerstones of my business and what I teach is that we're doing things legally and ethically, meaning that we are making sure that we are giving the government exactly what we're supposed to give them as it relates to taxes, but then also making sure that we reduce our tax liability to the amount that we need to in a legal and ethical way. So really for me, that was one experience I had. And also too, I had to do a lot of self-learning, a lot of self-education as related to personal finance, money, etc. Because again, as you can imagine, my mother being a single mother, there's a lot there's a huge scarcity mindset for a good reason, right? So she had to raise me and my two sisters. So really understanding the idea of abundance and growth and learning how to grow my money was extremely important for me. So that's what I was able to do.
So you were able to actually make that shift, seeing that happen in your family, or was there another moment, maybe when you became an adult, where you were able to put some of those better practices in practice, really?
Yeah, absolutely. So with that, I did a lot of self-learning, a lot of self-education. I spent a lot of time going to conferences, events, seminars, and really understood, the difference between an asset and liability, really understanding what you needed to do in order to proactively save money on taxes, right? So I went to one of the schools I went to is the University of Florida, one of the top schools for accounting and tax. And one of the things is I had to do a lot of additional education on top of that, because really currently what the education, based on my experience, what the education system teaches us is how to work in corporate America, how to be able to work a 9-to-5, but not really giving us the information that we need in order to help small business owners, which is what I was most passionate about. I knew I wanted to get into entrepreneurship, and I knew I wanted to help small business owners. So, fortunately through that experience, I've been able to do that, been able to help my clients save millions of dollars in taxes over the year, and just continuing to educate folks on what they need to do as relates
And when
to
it comes
taxes.
Okay, sorry about that. And when it comes to what they need to do, you place an emphasis on understanding taxes to maximize your wealth. Like, briefly unpack that for me. I know you mentioned bits and pieces of it earlier, but to the person who doesn't understand how maximizing your wealth can happen when you understand taxes, what would you say?
Yeah, really. So as it relates to money in general, right? It's not how much you earn, it's how much you keep. And if you have nothing to keep, you have nothing to pass down. And when it comes to all the expenses in our life, you got to look at it like this. Taxes are your single largest expense. When you make money, you pay income tax. When you buy something, you pay sales tax. When you buy property, you pay property tax. When you sell the property for more than what you pay for, you pay capital gains tax. When you
Hmm.
die, someone's potentially paying estate tax. But the biggest tax of them all, out of all those taxes, is ignorance tax,
Hmm.
right? When I say ignorance,
Yeah.
in a rude or condescending way, if you look at the word ignorance, it means lack of knowledge, lack of
Hmm.
information. So really understanding the tax code is our single largest ROI, because if we don't have money at the end of the year to be able to go ahead and invest in different things, because we're giving and overpaying the government. That's one of the downfalls of ignorance tax. Then we're going to not be able to grow our wealth. So by having more money, now we're able to pass that down. So one of the incentives, one of the things that you can do as a business owner is pay your children through the business. So that's a key way for you to be able to keep more money in your family, in your business.
Hmm.
That's one. And there's hundreds of different strategies, but that's kind of a little sneak and a sample of what you can do as it relates to being able to grow your wealth and be able to build money as it relates to taxes.
Wow, you said the ignorance tax is the most expensive. I heard you say that before in a clip on your page. Really, really good to just ponder that later. Really good. And so you we're also talking about President Biden's proposed tax changes. At the top, I talked about how to pay for the infrastructure spending bill. Partially, some of that will come out of our pockets, individuals and small business owners. And so, what's probably the most important change you see impacting consumers?
Yeah, there's a couple of changes. I think really a couple of things that we need to consider. So really the purpose of him doing these proposed changes, again, it's not in place currently, but the proposed changes, really the idea is to increase the tax revenue up to 4 trillion over the next 10 years, right? And the promise that Biden is having is that he's looking to basically tax individuals making more than 400,000. So if you are an individual making under 400,000, the promise is you're not going to necessarily be impacted directly as these changes are made, but we know the trickle down effect is going to ultimately end up impacting consumers. So a couple of things that we want to know as consumers, if you are under that 400,000 mark, some things that are going to happen now is one, he's going to increase, he's going to increase that marginal tax rate, right? The highest tax rate is currently 37%. He's looking to increase that to 39.6%. So that's one thing. The average consumer, one of the things that they put into the bill is now they're going to start monitoring, and they have new requirements for accounts that have more than $600. So a lot of people
Hmm.
doing transactions on Cash App, Zelle, etc. Now they have to actually report that. You should have been reporting it, but now it's actually a requirement for that to be reported. As far as child tax credits, a tax credit that's always been in place, but he's actually extended that, so that benefit has been extended. If you have a child under the 6 years old and younger, you now get 36,000. And then if the child is between the ages of 6 and 17, you get 3,000 for that. So that's a positive thing that's coming from that bill. If you are an investor, right, and you're doing what's called, and you have buy a property, sell the property for more than what you paid for it, you have capital gains tax, and usually you have favorable tax rates as it relates to that. You can either be taxed 15% or 20%. If you're making more than $1 million, if that gain is more, if your taxable income is more than $1 million, he's looking to now eliminate some of that 15 or 20% benefit, and now having you be taxed at the ordinary tax rates, which is going to be significantly higher depending on how
Hmm.
much money that you're making. So that's one thing to consider. If you're in real estate, there's also what's called the 1031 exchange, which is a tax
Okay.
benefit for you to be able to invest in. If you go ahead and sell a property for more than what you pay for it, one of the things that you could do is, instead of paying capital gains tax on it, you can go ahead and reinvest into a property of equal or greater value. Usually you're
Okay.
able to defer the taxes doing that, but with this new bill, he's looking to begin taxing that capital gain over 500,000. So those are a couple of things. The corporate tax rate is going to increase as well. Right now, it's a current flat 21% to 28%. So there's a ton of things to
Hmm.
consider. But ultimately, at the end of the day, despite all these changes, the most important thing to note is that you make sure that you work with a tax professional, someone that can help you proactively save money on taxes, because these things are going to change. There's going to be some back and forth
Right. And
to
you know what?
fully.
I'm sorry about that. Go ahead.
No, you're good. That was
I
pretty
was
much it.
I was actually going to ask you, how do you know how to find the right tax professional for you? Because, some people may be looking for a specialization. Maybe they should be looking for something else. What kinds of questions should I ask a prospective tax professional?
Yeah, that's a great question. So as it relates to the tax profession in general, right? There's several different types of people in the industry. You got tax preparers, you got CPAs, you got enrolled agents, etc. Right? So one of the things as a CPA, this coming from directly from a CPA, even as a CPA, a lot of CPAs don't necessarily know a lot of this information, especially as it relates to small business owners and what they need to do. So one of the I love acronyms. So one of the acronyms that I created to help people understand and figure out who they need to work with as it relates to taxes, especially if you're a small business owner, is what I call the tax elite. All right. So the tax elite is an acronym that I've created to help you understand who do you need to work with, what do you need to look for. So the first part of that elite is E. So education. You want to make sure that they actually went to school for accounting or tax. If they're a CPA, fantastic. That's one of the requirements in order to be a CPA. So making sure that they went to school for accounting or tax, that's going to be a
Okay.
plus. The next thing is L, legal representation. Legal representation. Can they represent you in front of the IRS in the event that you get audited? So CPAs can do that, enrolled agents can do that. The
Okay.
third component of that is I, integrity, right? So integrity is a major key cornerstone. Again, you want to make sure that you're working with someone that does things legally, ethically. They're not telling you to do things that you shouldn't be doing, making you claim kids you don't have. If they start telling you those kind of things, that's a red flag. T is going to be training. Are they constantly getting trained up? As a CPA, I'm required actually to maintain my CPA license. I have to do what's called continuing professional education credits. And
Mm-hmm.
last but not least, experience. So we want to look at years of experience. How long have they been in the industry? Usually 10 years is a great benchmark. And then also industry specific experience as well. So do they have experience with their specific industry? So those are that's a good framework to look at as it relates to it. Again, you just want to make sure that you really also ask for testimonials, reviews, case studies,
Okay.
etc. Because again, this is money, this is a serious thing, and again, you don't want to have to pay that ignorance tax if you work with the wrong individual. So
Okay, great. And thank you for running through that. Quick question from someone. What's your idea on going to, I don't know how to characterize them just yet, but uh, the tax preparing services that you see? I'm not going to say a specific brand, but you know what I'm talking about. You might see them in grocery stores. You might see them at storefronts. What's your thought about that?
yeah, absolutely. So with that, a lot of times they have tax preparers working in those institutions. So tax preparer there's one of the things that a lot of people knows, there's not really any requirements to be a tax preparer, right? So literally, if you wanted to, you can become a tax preparer next tax season. You don't have to go to school to do it. You don't need any kind of certificate. A lot of times they just give you a training program and teach you how to use their software in order to do that. So usually, if you are a business owner, I don't know if that's going to be the most ideal situation for you because as it relates to business, there's so many different nuances, especially now this year,
Right.
the upcoming Biden tax proposal, tax plan, it's going to be a lot more complicated. Now, I will say this, if you're making less than 50,000, maybe if you don't have too many children and your situation's a little bit more simple, you're not in real estate, you're not investing, you're not doing anything like that, then I think those types of institutions are going to be okay to work with. But again, if you're making more than that 50,000 mark, if you have a business, if you are an investor, etc., then I would highly recommend you look into working with a professional one-on-one, and then again going through that tax elite to figure out if they're qualified to help you with your situation.
Okay, I think that's a great place to leave it. You gave us a wealth of information, Michelle. And if you guys want to learn more about how President Biden's tax proposals might impact you, Michelle actually you have a course on it, right? So hop on over to Michelle's Insta page or his website, and feel free to send us your questions as well. And we can try to refer you guys to other people who may be able to help. So I am reporting live from New York. I'm Renita Young. And have a lovely day, everybody. Thank you, Michelle. Have a good one.
My pleasure. Thank you. Take care. Bye.